So, moving to the page one. So basically, Defense Index Fund, I'll tell we launched it with a special focus and towards the Indian companies or in the manufacturing side, which have a special focus on defense. We saw a certain traction building up post 2015-17 in the defense side, and government focus is also shifting towards the defense companies, and that is the thing which actually made us launch this product. So can you go to the second slide? So, why this defense need actually, as we are talking about, why it happened? So, as you all know, that India is a country has wide borders. We are blessed with land as well as sea borders. Um, uh, India currently is also a world's third largest growing, fourth largest economic, aspiring to be in top three right now. And since last few years, our focus is to be a leader in the global manufacturing space. Okay, we are actually focusing on building in that infrastructure, investing capex to kind of facilitate the manufacturing industry. As you've seen, we've faced couple of wars since the independence. We've been through few wars, and thanks to our hostile neighbors, uh, these wars are never ending kind of a situation. Either they are direct wars or proxy wars in form of terrorism. So these kind of scenarios are constantly pushing us to be a country which is self-sufficient towards growing, towards satisfying its defense needs. We as a country have been historically as a net importer of the defense products. However, uh, in last couple of years, the shift has been dramatic. We've seen we are moving from maximum import scenario to now net zero import scenario. What has enabled is basically there are few things that took place post 2015, as our honorable Prime Minister said that we will be focusing on modernization and becoming a self-reliant country when it comes to overall manufacturing, and with a special focus on the defense production. So a few initiatives that were undertaken was kind of is enforcing restrictions on import from for certain products, allocating a higher budget when it comes to defense manufacturing. We are also enabling a technology transfer from the government institutions to a private players to encourage high quality defense manufacturing. So entire India's focus is towards becoming a Aatmanirbhar. That is our vision for future. Can we move on to the next slide? Yeah, thanks. So here in this slide, you will see what has been a scenario on the global side when it comes to a global defense expenditure. So you can see the global defense expenditure grew by 3.5% from 1,962 crores is billion dollars to 2,771 billion dollar. Now this is a global defense expenditure. Vis-a-vis, if we compare that with India's defense budget from 4.7 lakh crore grew to 7.9 lakh crores in the span of 21 to 26. That is a 5 years. So that the CAGR is is almost 11% now. With this, what we are trying to say is the overall Indian defense budget is a need of an hour and is on a growing trajectory. Add to that India's special focus on the Indian manufacturing companies on the defense side. So that entire budget allocation or maximum part of that budget allocation, I guess it was around 7.85 lakh crore of our total budget this year, and similarly was around 6.5 lakh crore last year. This entire budget went to on the defense manufacturing. Now, the more larger part of this budget is going towards Indian manufacturing companies for the defense. We are expecting in future, okay, that by next FY from FY26 to FY30, the CAGR of growth on the capex side will be around 4 to 8%. So again, which will be higher than the global defense expenditure. Again, there is a next slide which is talking about India's defense position and strategy. How we are placed compared to other countries which are the leading superpowers across the globe. As you can see, India has active personnel of 14 lakh 31,000 vis-a-vis China, which is our next door country, has 20 lakh 35,000 personnel, active personnel. Russia and USA are around 13 lakh active personnel. If we look at the land systems, which comprises of tanks and armored vehicle, again, India is lacking substantially behind this China, Russia, and USA with 4,000 approximately tanks compared to more than 5,500 tanks of China, Russia, and USA. Again, on the armored vehicle side, we are almost at par compared to the other larger superpowers. In aircraft category, again, we are lacking substantial, and there is a innovation that needs to be, focused. With Tejas aircraft, India is focusing on bridging the gap of the in aircraft space. We have 476 fighter aircrafts compared to more than 1,400 aircraft which China has, and 1,700 aircraft which USA have. If we look at the naval powers, interesting to see that we have two aircraft carriers currently with us. Compare that with USA's aircraft carrier of 11, China's number of 3. Russia is again at 1. On the submarine side, we are at 11, and China, Russia, and USA combined above 60. So this also says that we need to be protected on the naval side. We lack resources substantially on the naval side as well. Whereas we have a very good sea border to protect us from and to protect our trades which happen through sea route. In the defense spender, India currently ranks almost at the 5th number. This is 2025 numbers. As on 2025, India is ranked 5th with $92 billion spending. Compare that with USA, China, and Russia, which are almost about 200 billion US dollars. So, what India is doing to be competitive enough on a global scale. So, India has an advantage on a manufacturing side that we are comparatively running at a low operating cost model. Okay, we add a high value of defense equipment. Our capabilities were shown by the excellence of ISRO scientists, which were able to send expedition ship to Mars at the lowest budget. So that capability, the technological superiority we have, and that is also we do not we have that capability at the lowest operating cost. Besides this, we are focusing on indigenously built equipments, mainly focus on the planes, that is stages. We have given the order, we've got the order of 97 light combat aircraft to HAL to produce these indigenously made Tejas 2 fighter planes. Can we move next slide? Yeah. So, in this slide, we will see the import and export currently, what is the structure and what the structural shift has happened. As I said, in last 5 years, India has historically been a top importer of defense arms and ammunition. We are shifting towards net zero imports. Everyone, please listen to this concept of net zero import. I'm not saying that we are importing less. What we have done is we are exporting higher. That is why our imports and export, if you minus, that is now balanced. It is we are targeting a net zero import. We will be always be importing certain arms and ammunition by nature of this industry. Some countries develop superiority in some products, so we will definitely be importing. But that that import should not cost us higher, and that is why we are now focusing on exporting our technology, exporting our equipment. As you can see, the CAGR of our export is at 38% since FY17. We were exporting 1,522 crores of defense export, which now grew to 38,424 crore. It's a substantial export that has happened, and it's a huge growth. And when I say that this growth mostly beneficial to our Indian companies, we'll see that in subsequent companies how those company got benefited thanks to this export growth. We as a country, as our government aims to achieve 50,000 crore of export by 2029, that is in next 3 years. So India aspires to be a global defense manufacturing hub. Thank you. When we talk about defense, okay, as you all are aware that all these companies needs to have a technology, and we have those credentials to be present at a global level to market our products. And what are those credentials? So DRDO is government's research arm. The government has decided to transfer their technology to MSME or public or private sector companies to faster, higher quality equipments required for defense. And they basically are enabling faster commercialization of indigenous technology. As I mentioned, that in your current budget, that is Union Budget 26-27, the allocation to the Ministry of Defense increased to 15%. We are currently at 7.85 lakh crore of budget associated to defense. Please stay on the previous slide. Our DPP, that is Defense Procurement Program, is focusing on the procuring whatever equipments needed from the domestic companies. So basically, there is a policy driven push to grow demand for Make in India product. Um, okay, okay, DPP also focused on Aatmanirbhar initiative to encourage domestic procurement, as I mentioned. And we are encouraging higher FDIs. In our next slide, we'll mention the higher FDI percentage now going from 49% to almost 74%. Can we move to the next slide? Yeah. So, government, as you all are aware, what is the policy support that we are getting out here from the government? So, government is pushing for joint ventures. As we have seen in Rafale deal, we are importing Rafales. As many of us have read, almost 115, 113 or 111 Rafale is the need or ask from the government of India, but from that only 12 or 13 Rafale will be flying from France to India. Rest of the Rafales will be made in India. So that those are the kind of joint ventures government of India is entering into. Again, pushing for joint ventures, make in India on the Indian soil. As I mentioned, FDI is increased from 49% to 74% under the automatic rule. Our focus is on R&D and innovation. We've built in excellent capacity in the missile sector. Our BrahMos are the most feared missile world over. Our capabilities in the missiles has been exhibited to the world, and they've been appreciated in the supersonic segment. Uh, we are also focusing on optimizing our cost, thereby reducing manpower and other costs, which is making our products more cost efficient and thereby cheaper. We want to achieve the larger market share when it comes to the defense side, and we are selling it to smaller countries as well, like Armenia, Vietnam. These are the countries which are buying continuously from India. So to make it affordable, we are focusing on reducing cost as a major attracting factor. We also have incubations in terms of enabling MSME growth, and we are focusing on maximum resource allocation or optimizing the resource allocation to meet the efficiency target. Can we move to the next? Okay, so this slide will talk about more of a technical side. This talk about the emerging technology. Basically, we're talking about what we are doing on the defense side, be it on the naval, be it on the aeroplane. So we are basically developing our network-centric warfare focus based on the real-time data. We are going quantum safe. We are developing or implementing a strategy on post-quantum cryptography, thereby securing our entire architecture from any attacks. We are developing a hypersonic missiles or weapon systems. We are developing our laser systems to as a major tool in the defense side. So this slide will talk about talking about the next gen or new emerging technologies that we are focusing on. Okay, why now I've completed what is the need for India to be in the defense sector, what is the global scenario, what we are doing, what as an industry as a defense is doing. Now let us see why it is a compelling case for our investors to look at a defense sector. So as you are aware, that defense sector is well placed in terms of growth currently. Uh, this the I'll be talking about a defense sector as an index. So in this defense sector, whichever companies are part of it, they need a government sponsorship, a government bond sponsorship. When I say, it's like a backing to build a legacy. You can't give airplane manufacturing contract, or maybe a tank manufacturing contract, or maybe a any defense suit manufacturing contract to any company. You need to have a legacy. So the entry is very, very difficult in this segment. Any new companies cannot start generating any defense equipment because they will not find any buyers if it is not government buy sponsored or government backed. Uh, there are there are barrier entry, again, because this defense sector is very capital intensive business and has a product evolution going through phases, and these product evolution stages are quite long. The product needs to be tested every now and then, and the parameters are very strict. So whenever any player thinks about getting into this defense, they need to have that long term vision and long term budgets to sustain that period. It is also a niche proposition in terms of building the capability and serviceability, because any you can say any type of uh, tanks or any type of armored vehicles, submarines, ships, they will not be needing only development stage, but they will need continuous servicing. So these servicing also, we have Cochin Shipyard, Musgao Shipyard. They have manufacturing as well as servicing ability. So you need to be at both development as well as servicing parameter at the top position. Uh, we also have low product substitute thanks to higher unit cost and long-term. We are trying to upgrade our missile system. We are focusing on the lowest low-cost model into the missile. Our market growth potential is high due to low cost base, as we explained, and companies expected to benefit with higher market share as demand surges in the sector. The last point is critical out here, as we know that continuously there is a global tension prevailing since Russia-Ukraine war. This Russia-Ukraine war kind of brought in the global instability globally, and it has now translated into a US-Iran war, and which is continuing ongoing war or war-like situation. So this create a discomfort amongst the nation, and this is actually benefiting the defense sector. Uh, so with this, uh, we want to say, are you ready to defend the your portfolio and armor your portfolio with defense stocks? Why there is a need that defense stocks should be a part of your entire portfolio? So we'll come to the with this we'll come to why Aditya Birla Sun Life Nifty India Defense Index Funds is critical. So as you know, I'll talk about a product composition here. Uh, Whichever stocks are selected in this product, they are the part of Nifty Total Market Index. The stocks are selected must be a part of SIDM. It is a Society of Indian Defense Manufacturers, and these stocks should be forming a part of basic industries. Okay, the rebalancing of the stocks happens semi-annual, March and September. It's a free float market capitalization, and none of the stock will cross 20% market cap. Um, this is a chart visible to everyone. You guys can see. Um, Prior to 2022, precisely in this chart, uh, defense from 2018 till 2020, defense was not going anywhere. It was going along with Nifty total market TRI and Nifty 50 TRI. Post to 2020, which is the Russia-Ukraine war began, we see that the defense started upward trajectory. In 2022, it was able to beat Nifty 50 and Nifty total market TRI, and then it has gone upward. I mean, it's kind of a straight up position that you can see. What are the factors contributing to it? Is mainly Russia-Ukraine war and the China-Taiwan tension that is currently that was going on, and the Middle East conflicts that is now prevailing. So please note that this is a chart available since 2018 because this is a index chart. This is not a Aditya Birla Defense Index Fund growth. We'll come to that in the next few slides. Okay. How defense total return index performed compared to Nifty total market TRI versus Nifty 50 TRI. As you can see, on a 1 year basis, it has performed 37% when compared to Nifty total market return index 7% and Nifty 50 return of 1%. On a 3 year basis and 5 year basis, it has performed more than 60%, whereas Nifty 50 and Nifty TRI is just hovering around 15 to 11%. Since inception, that is since 2018, the index has performed 33% when compared to Nifty 50 total market TRI of 14 versus Nifty 50 TRI of 13%. If we see in the adjacent table where we are giving calendar year performances, defense TRI has started performing over Nifty 50 post 2021, and it is continuously outperforming. You please note out here that the standard deviation of this product will be a little higher because it is a sector specific fund having a higher volatility. Can we move on to the next slide? Yeah. So in this slide, we are talking about top 10 stocks. We have a composition of total 19 stocks, but for the presentation purpose, we are taking a top 10 stocks. And amongst top 10 stocks, you can notice that the top 4 stocks carry the maximum allocation, which is Hindustan Aeronautics, Bharat Electronics, Bharat Forge, and Solar Industries, having a composition of more than 60%. If we add to that Mazgaon Dock and Cochin Shipyard, we cross almost 70% in this. So these are the stocks which are comprising of the Defense Index Fund. The P of Hindustan Aeronautics is currently at 35.2, which is currently the stock has taken a beating. That is, the P has come down significantly. Bharat Electronics, Bharat Forge, and Solar Industry are commanding a higher PE thanks to their demand. The stock composition is, if we see as a per market cap, 54.6% stocks, almost 55% stocks are in the large cap. In the mid cap side, we have close to 22.7% stocks, and on the small cap side, we have 22%, or just a little more over the 22% of exposure. In this slide, we've just for the explanation purpose and just to tell you how the index, this defense index, is able to beat Nifty 50, and the primary reason for that, as you can see in the Hindustan Aeronautics, it has outperformed Nifty by almost 8% in 1 year. Now, it is a marginal improvement when it comes to Hindustan Aeronautics. But next, in the Bharat Electronics, if we can see that the stock has outperformed Nifty 50 by almost 42%. Bharat Forge has outperformed almost by 78%, and Solar Industries are outperformed by 22%. So the main drivers, top four drivers are mentioned here. These are the significant drivers having almost 60% weightage in the index. We see that going forward, they have a reasonable order book. I mean, if you see the why defense index funds are positioned as a long term, because all these companies get, whenever they get order, the order takes time of roughly 5 to 8, 10 years to materialize it due to any reason that, like, they are building in the capability or they are delivering. So usually 5 to 10 years is the delivery time which is taken. uh, so anyone who thinks about investing in any such companies or this index needs to have that mindset that if I'm investing today, whether I'm investing looking at the profits of today, or whether I should be looking at profits that will materialize in next 5 to 10 years, because that is the when we have revenue visibility which is built in by order book. Uh, Again, this is a reiteration of why one should look at the defense sector. We've almost covered this in our previous slide, that why should we be looking at the defense sector. Uh, as we mentioned, so I'll just quickly go through this. We need to have the defense sector has a strong policy support and a higher budget allocation. It has a long-term revenue visibility. It has increasing analyst coverage due to current unstable geopolitical environment. It has a stronger government backing, and we, as a India, is focusing on exporting the products to foreign countries. So international diversification also forms a major part of this. Why choose a passive fund is because today um, everyone looks at a passive fund for the beta, because these are the cheap products available. They are considered to be giving index aligned return. But can they give alpha? Yes, passive funds can give alpha, and these are the ways that passive funds can give alpha. If one has exposure towards passive fund, thinking of having an exposure in like a satellite investment, then this defense product or such sectoral products can give that alpha. Can we move to the next slide? Yeah. So again, who should invest? Who is the right audience? So you guys are going and talking to investors. The investors who have a long-term vision, um, I'll not put a number to it, but roughly over a period of next 3 to 5 years, if someone is ready to park money for more than 3 to 5 years, then they should come into this product. This product offers a diversification on the index side. So thematic product again, uh, and generally the growth in the defense sector is looked upon by how healthy your order book is. All these components have a healthy order book for next 15 years or 15 to 18 years. This is a policy-driven industry, and we do not see government as of now taking his eyes off from the defense sector, especially given to the how unsafe the global geopolitical scenario is. This particular index, when I'm talking about a defense manufacturing index, this has a low correlation towards a broader market. This low correlation also enables investors to add some other companies to their portfolio. And as you are aware, the more unstable the global environment becomes, the more need for defense companies arises. And when your normal stocks are going down, these stocks will always be on the upward trajectory, which is very much visible in the charts we've seen that in the Russia-Ukraine war, since the Russia-Ukraine war, the chart is moving upward, beating Nifty 50. So it also construed as a natural hedge against geopolitical conflicts. These are the scheme details. I'll not take much time on this. Um, can we move next? So this is I like to, as a compliance part, this is a very high risk scheme. One needs to have that as per riskometer. The rating is very high.